Hey everyone, welcome to CoveredCall ETF Investing, your central hub for deep CoveredCall ETF data. Today's video, we are going to be talking about year-over-year management expense ratio changes. This is something I'm working on for the newest update to the CoveredCall ETF AllStar tracker, which will be on September 1st, which is, of course, for many of you, as you know, I've created a spreadsheet to track the health and the history of the industry of CoveredCall ETFs. So a lot of powerful data in there. It's over on my Patreon page where you can, the link will be in the description below or the very first comment that you see. And a lot of live data over there. It in my opinion, it might sound self-serving, but it's the best thing out there. It just is. It is just the best thing out there for your income investing needs, and it's all in one location. And I continually monitor and update it on a monthly basis. So that is something that as we talk about these year-over-year changes, as a small sample, this will give you an idea of what you can expect for next month's tracker with the various 150 Canadian CoveredCall funds out there, along with any American changes as well. So before we also get into that, just a reminder, I am going to be having my first ever live stream on August 14th, Wednesday. So whether you're subscribed, not subscribed, a Patreon member, come over there, hang out, ask me all your deepest burning questions about CoveredCall ETFs. And whatever, test my knowledge that way, and we'll see what we get. But I think this is a good way to connect with you all, and honestly, it's my favorite thing to do anyway with running this channel. So let's hang out for 60 to 90 minutes on Wednesday. Okay, so let's get into the main sequence part of the video here. So we're going to cover three funds. We're going to cover Bank by Evolve. We'll cover BMAX by Brompton Funds, and we'll cover USCC. Two of them have increases. One of them has a decrease. And then, like I said, you'll have to wait till September to see the rest of the increases, decreases. But for those who are newer, you might not really understand how the fee structure of things work. If you're an older investor, or well, I should say a more experienced investor is probably a better way of putting it, then this is nothing new. The only thing that will be new is just staying tuned for the changes that we're about to see here. So for those who are new, on most fund manager websites, you'll see something that looks like this: management fee. Now, this is what it costs to simply just pay the fund managers. But there are other costs associated with every CoveredCall ETF. There are trading expenses. There are leverage costs. There are other, marketing expenses, other custodial costs as well. So to find that out, which in my opinion, and it just is the most important number out there, what you want to do is head down the fund manager page, or in this case up, head to documents, and there might be a bunch of links to all kinds of random stuff. But what you are most interested in is a spot that says ETF facts. So we click on that, and a lot of these ETF fact sheets all pretty much look the same. So the number we care about is right here: management expense ratio. That is the total all-in costs to operate the fund. And it'll give you a date as to when it was last updated. Now this, you won't see an MER for a fund that's less than a year old. It needs at least a year to compile all that data together for, I guess, tax purposes before you get this number. So it's 2.16% in Bank's case, which invests in the big six banks in Canada, and along with a couple of insurance companies and financial service companies. So this ETF has been around since 2022. It has about 25% leverage. If we head back to the main page here, we'll go back to overview. Right, we can see that it uses a maximum of 25% leverage. It writes covered calls on up to 33% of the portfolio, meaning that the other 66 point whatever percent gets to participate in all market action, and there's no drag on the price performance on the other side of things there. It's gone from 1.7%. When I first documented this, it would have been late last year, either in November, December, all the way to 2.16%. That is a 27.06% increase in the cost of operating this fund. Now, why would it increase so much? Well, I think the biggest explanation for this is just going to be the leverage costs. Anything that you infuse leverage with, you can be sure to jack up the MER cost. In my experience, if it doesn't have leverage, the MERs typically will be slightly above the management fee. So if this was unleveraged, you could probably expect an MER of maybe 0.8, 0.85. Like it might be, it could be 0.25% more if it was unleveraged. But yeah, the leverage costs really might make you choke a little bit if you're not familiar with or you're not used to seeing that. So, and what has happened in the last year, we're talking maximum interest rates, which directly affect the cost of managing a fund like this. So for bank, that's once again, 27.06% increase, but once again, uses leverage. The next fund we're looking at is BMAX. This is a fund I own in my portfolio. It holds about a 10% weighting within my TFSA. Really happy with this fund. If it grows, it seems to just stabilize. When things start to go down, it really heads down slowly. So it's weird. It like heads up pretty good, in the good times, and it kind of just buoys during the more troubling times. And we've certainly seen more troubling times recently with the most recent market pullback. So anyway, that's what I like about BMAX. But let's just head down here, management expense ratio or management fee. Now you're going to see 0%. This is a fund that invests in other ETFs. So ETFs that invest in other ETFs, you'll typically see 0%. Now, don't jump out of your chair with excitement too quickly, because you are still paying management fees on the underlying ETFs that it holds within it. What we care about most is the management expense ratio, which again, you go to the ETF fact sheet under documents. Once again, it looks exactly like what we saw with bank. And we can see a management expense ratio of 2.85%. Where was it last year? BMAX had a management expense ratio in 2023 of 2.59%, making this a 10.04% increase. Now, once again, why did it increase its fees? It's the same story with BMAX that it is with bank. These are two leverage funds, but the difference being BMAX, its leverage is actually higher than bank with 33%, somewhere in here. Anyway, it's 33% leverage, which is the highest of all the CoveredCall ETFs in Canada. In Canada anyway. So at 33% leverage, you're paying more costs. We've seen an elongated period of higher interest rates over the past year. Only recently have they started to come down. So this will be more or less reflected in 2025. Expect the MERs to come down in that period of time. As they do, it just bodes better for yield and performance and total return just overall. So that is it for at least the increases in MERs. Let's actually talk about one notable decrease, which is by Global X, USCC. Now, the nice thing about Global X I really like about them is that they put the management expense ratio right here. And it's on it's on the same page as the management fee, right? But they also have trading expenses as well. So imagine if you just landed on this page for the first time, never looked at an ETF before, and you look at the various fees. The only thing here is if to the untrained eye, you might not understand which one of these it is. But once again, it's this number right here. So all-in fees is what it is. Now, that's as of December 31st, 2023. Now, if you're a keener like me in this regard, you're like, well, let's just see about that. So let's head over to the ETF fact sheet and let's see if that number is updated along with what's here in the fact sheet as well. So it is. It's all updated. Good to see. Now this actually has a decrease from when I first recorded the MERs with USCC. So at least when I first started noting this down in the tracker, probably last October-ish, I started inputting this data, and maybe even November. It had a management expense ratio of 0.80%. Now down to 0.60%. That is a 25% decrease. Very notable. Kudos to Global X on bringing it down. Now, I know they've had some, I would say, some marketing incentives to invest in some of these, more notably with things like BKCC. So there is a potential for this to potentially go back up to where it was, say, back in 2023, maybe by next year, but we'll have to wait until next year to find out. But regardless, whether or not that's the case, I'm not familiar with USCC. Like I said, I'm only kind of familiar with those marketing incentives to bring down the management fees with funds like BKCC. So regardless, it's a decrease, and that'll make investors happy over the long run, especially if it sticks. And no doubt, especially compared to other funds, I mean, if you're happy with an 11% yield, where are we here? Let's go to the top. If you're happy with an 11% yield, right, like that's going to be way better than, a leverage cost if that's something you care about. I typically go for the leverage-based stuff as I want to try to maximize performance, both on just the price level, the total return level, and also the distribution level as well. So that's just sort of my general take on fees. But yeah, stay tuned for September 1st when I'll release just all the management expense ratio changes along with just the general management fee changes as well come September 1st for that CoveredCall ETF AllStar tracker, which as always can be picked up in my Patreon down in the description below or the very first comment you see. So hopefully you all like this video. Do the cliche thing and hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.